Hi guys, welcome to the YouTube channel, The Novel Trading. This is Goel, your intraday trader and trainer over here. Today we are going to discuss a very important news CPI Index data release on this Valentine Day. And today we are going to discuss how to catch the gold pips on it. And if you do it correctly, then you will be able to gift your girlfriend an expensive gift. So first of all, let's go to the calendar and let's see the news is coming on the 14th of February. As you can see over here, the USD CPI data is going to be released on this date. Okay, so let's see what is this data. Basically, it's a consumer price index data. And why traders care over here is consumer prices account for majority of overall inflation. Inflation is important to currency valuation because the rising prices lead to the central bank to raise the interest rates out of the respect of their inflation containment mandate. So what happens is if this data is being positive, then we can expect that the future data, that means the future interest rates are going to be increased as well. So regarding the news, what we can expect is a huge volatility on this time. Okay, so please do take care that IST, it is going to be released on 7 p.m. You have to adjust the calendar according to your own country timeline. Okay, so this is the fundamental aspect. Now let's go move on to the technical aspect and understand how we are going to catch all of these pips in the gold itself. So first of all, for technicalities, we are going to move towards the dollar index over here. So what I have done over here is on the tradingview.com, I have opened up the dollar index for you so that we can understand what is the dollar index movement doing. And based on its technical analysis, we will be able to decode its movement. So what we can see over here is that the dollar index is actually in the bearish trend over here. Okay, in the bearish trend over here. And according to the SMC concepts, what we can understand that this was my last breakout structure which happened in the market. And then the market continued in a rally. Do not try to misunderstand this as a chalk. Some traders expect this as a chalk, but this is not a chalk. This is the retracement has been started for the 4-hour chart on the USD index. So what we can understand is this is the last bearish order flow which has been mitigated by the price this week. Okay, since the price has been mitigated, we are expecting a bearish rally on the USD index on the news date. So as soon as the news will release, then we can expect a bearish momentum in the prices of the USD index. And let's say the price wants to change its character and then wants to go upside and take out the above side liquidity, then what we can expect is that the price first will rally down towards the downside and will mitigate its bullish order flow. And only then it will be able to go towards the upside and take out this high. So you have to actually take care of the movement. The higher probability of the price is to go towards the downside because this is the unmitigated bearish order flow which has been created by the 4-hour chart. And the price this week has just mitigated it. And we are expecting a volatile movement on the market on the 14th of February. Okay, so if the USD index is going down, then we should understand. So what is going to happen in the gold itself? Since you know that the gold and the USD are anti-correlated. That means if the price is following a bearish movement in the USD index, we are expecting a bullish momentum in the gold. Okay, so let's go on the gold chart and understand what is going to happen over there. So as you can see guys, this is my 4-hour chart for the gold and you can see that it was a huge bullish momentum from the last so many days and the price was continuing it. And what did happen over here? Price did give a change of character towards the downside, but this change of character is not genuine because this is just the formation of the retracement which has been started. Okay, so what we can see over here is according to the advanced structure, institutional market structure, what we can understand that this was my last breakout structure towards the upside. After that, the price has not given us a breakout structure and the price continued its rally towards the upside. And this is the first time that the price is given us the retracement. So if this is the retracement, we can expect that this last bullish order flow is not being mitigated by the price. And price has created a lot of liquidity above this order flow. And as you can see in the last week, what did happen over here? The price just mitigated the bullish order flow over here. And we are expecting a good bullish momentum towards the upside. So we are expecting that on this news date, at least this side liquidity will be taken out of the market. The market will move towards the upside and will take out this liquidity above, resting above this high, and it will take out the liquidity resting above this high and will be mitigating this bearish order flow, this bearish unmitigated order flow over here. So on the 14th February, the news is expected for the bullish momentum in the gold analysis. Okay, this is how the price will move. But let's say on the lesser probability side, the price wants to continue towards the downside, then what will happen is that the price will first rally towards the upside, mitigates this supply zone over here, and then it will start moving towards the downside and will take out the liquidity residing below these lows. So this is how you can catch the movement on this 14th February. Huge pips are going to be there because huge volatility is going to be there in the market. Okay, so for catching these trades, try to go on the shorter time frame. So let's say if you go on a 15 minutes time frame and understand where is the market is actually flowing. If the market goes above this high, that means the market will give a change of character towards the upside, and we are expecting a price to always bullish momentum. So if the price goes above this resistance of 1891, which is a 15 minutes high as well, so price will follow like this and will create liquidity, and then it will try to go upside and will take out all this liquidity resting above this high. So this is the targeted high liquidity which we are expecting, that if the prices follow a bullish momentum momentum on the 14th February, then we are expecting this high to be broken out. So 1919 is the target price if the price follows the bullish momentum. But let's say if the price on a lower probability sides goes towards the downside, then what we can expect over here, if the price goes below this support level, that means the price will give you another break of structure towards the downside, and the price is continuing its bearish momentum towards the downside only. Okay, so if the price continues its bearish momentum towards the downside, then what liquidity can we expect to be taken out when the market is, then again we will go on the 4-hour chart, and this is the liquidity that we can expect that the market will try to take out. Okay, so 1825 will be your target if the market will follow the bearish momentum, but this is a less probability chance. As you can see, the price has already retraced a lot. If the price wants to go more down as well, then the price have to go towards the upside and take out the previous high, take out this liquidity, and only then it will be able to follow towards the downside. So this is the correct momentum of the price. The price cannot travel in a straight line towards the downside. This is not a V-shaped recovery. This is not the correct momentum of the price. So price will take a U-turn towards the upside, will mitigate this bearish order flow over here, and only then will decide the future course of the price. So this is how you can trade on the Valentine weeks and catch the gold pips over here. I believe that this analysis video has been very helpful to you guys, and I expect that you will be able to catch a lot of pips on the gold on this Valentine's Day. So if you attained any good knowledge, please do hit the like button, guys, and please do subscribe the channel, because in the coming videos I'm going to come up with a lot of analysis on this important news that is going to come in the coming week. Okay, so please wait for the next video. Until then, good luck to you traders. We will catch up in the next video. Do subscribe the channel, and if you have any query related to this, please do share your query in the comment box. Good luck to you traders.